I found that nothing in life is worthwhile unless you take risks. Nothing. Nelson Mandela said, "There is no passion to be found playing small and settling for a life that's less than the one you're capable of living."
Hello traders. Today we'll talk about market reaction after the Fed announcements on Wednesday. So Jerome Powell came up at 1400 hours at 2 p.m. and pretty much said two things that actually moved the market in a big way. Number one, the Federal Reserve maintained the interest rate at near zero and will continue for a long time. Number two, he reiterated his commitment to aggressive asset purchases. He actually announced that he will be buying $120 billion in bonds per month, $80 billion in treasury securities, $40 billion in mortgage-backed debt. However, he was not clear about how long he's going to continue the purchases and what's the criteria for slowing these purchases down. What he did is pretty much he released a fresh set of projections to reaffirm and assure investors that the market is not about to crash. He showed that the policy interest rate at near zero will continue to be that way for years to come, even at the growth expected to pick up considerably in the near future and the near term, since everybody's taking the vaccine. It's at this time, $100 million people received the COVAX, at least the first shot. If you guys remember, in March 2020, the Fed slashed the interest rate to almost rock bottom in order to guide borrowing costs throughout the economy and drive the economy up. He also chose to keep it that way on Wednesday, and that was his effort to keep the credit cheap and continue the economical growth. He was clear that he wants to see the job market back at full employment in a way that was prior to COVID-19, and he wants to see the inflation slightly above 2%, and he wants to see it staying at above 2% for a long time before he thinks about lifting the interest rate. It seems like there's consensus around leaving the interest rate very low for a long time. A lot of people in the political and the financial arena wants to keep it low in order to drive the economical growth forward. The Fed estimates that inflation suggests the price gain will rise to above 2.1% by the end of 2023. At the same time, the unemployment rate might fall further and more quickly. So we have, I would say, another year or so before we start seeing any interest rate hikes. And usually when they start raising the interest rate, that's how the markets react in a negative way and start taking a downturn or correction. So let's look at the chart as he's speaking. How does the stock market reacts to his statements? As always, let's do a chart orientation first, because not everybody is aware of what are the technical indicators are. So this is the S&P 500, and the time frame is 5 minutes. So every single bar of these represents 5 minutes in the market. This is a prior day close, which means that's what the last price before the market closed at 4 p.m. yesterday. This is a 20 period moving average for the 5 minute, and as you can see, it's a declining 20 period moving average, which is a bearish day. This is a 200 period moving average, which is a flat. You can see it's flat, which means not a whole lot of movement in the market at this time. However, as soon as he came up on TV and he started his statements, an immediate response. This is the 2 p.m. right here. Immediate huge volume came in. Bullish move all the way up. First leg up. Made it go from deep in the red to green. The market, the S&P pulled back to the 200 moving average, which was supported, and then it went for another leg. Usually this is a profit take for most traders. Whoever caught that move here wanted his profit take at a solid resistance, which is the prior day close. So they got out of the market right here. And then as the market pulled back, there was time for those other guys who actually missed that move to buy here and sell up there. It was a beautiful move, and I hope some of you caught it. Let's see the Qs, the tech sector. How did they react? Same exact thing. As he speaks, went for another first leg up all the way to the prior day close, come back to the 200, almost identical picture, went for another leg up. Let's see another chart. Let's see Apple, for example. Apple had even a much bigger move. Same thing, bearish day, flat day, very deep in the red. As soon as he comes in, the volume comes in, huge purchase all the way to the 200 moving average. I assume it hits resistance at the 200 moving average because it was a little bit further away from the prior day close. So that was the first resistance where traders decided to take their profits. Pulled back a little bit, not far. It was less than 50%, so that's a healthy pullback. And then went for another run. You know, that red bar didn't stop. It was just a little pause for 5 minutes, and boom, went for another run all the way to the prior day close, and the two-leg move up was complete. Let's see how the markets reacted in real life.